Hello, everyone. Welcome to our presentations. So today we're going to look at the financial aspect of ETSY and the company we chose to look at and decide whether we should buy, invest in the security of the company, or should we sell it. So a little bit of background information about ETSY. Operates as an online marketplace that focuses on handmade and vintage products. The company has expanded its operations in 42 countries, with most revenue coming from the United States. Using the SWOT analysis, we can notice some of the biggest strength of the company is operating a niche market with cheap handmade and vintage products to increase exclusivity. However, the biggest weakness is that it's dependent on active sellers and to maintain operations as a nature of the marketplace. Besides that, there is a threat coming from the Russian-Ukraine war, leading them to close their operations in Belarus and Russia. Using the peso analysis, one can affect the operation of ETSY is in the economy, as there has been a fluctuations in the currency exchange rates, and there's also concern the rising in inflation rates, and the economy is entering a recession state. Both can affect the revenue stream of ETSY significantly. Using the Porter Fact Force analysis, we can tell that there's a strong threat coming from the new entry, as ETSY would expect to have a lot of competitors, as they have a low entry barrier raised in the industry. Besides that, traditional retailer is moving to the online platform to coexist with the traditional retailing as well. There's also a strong threat coming in the industry between rivalry like Amazon, eBay, as those are big company that can compete against ETSY effectively. Using the share price performance, ETSY share price experienced downfall by 39.73% and has the lowest performance compared to the rest of all the competitors. Now we move to the investment.
So the first investment data is about the competitive market with saturation to help us to know the potential of ETSY throughout the intensive market. And they have 6 primary business drivers to help to support their fundamental operations and their sales growth. So both for ETSY and global retail e-commerce industry, they all have a boosted to 2020 and follow a downward trend for the past few years. And especially ETSY reached as 110% as 2020, which is way more higher than the global. And they also make efforts to their market penetration, and they reached at 0.16% of the market share in the e-commerce platform. And their top 3, the competitors are WooCommerce, Shopify, and Oracle Commerce. And ETSY also as an international platform, they made really contributions to their customers by geography in the global market, and which helps them to expand the global market sellers and the buyer space. So there are some pros and cons of selling on ETSY, and the pros comes to like easy sign-up process and the fast product listing. But there are also some cons, like these need some additional fees, which may not that helpful for the sellers to sell their products, and their backward algorithm may not just like Amazon to help to make the great matchup with the products. And the second investment that is about the business structure about ETSY, which may cause a flexibility or uncertainty to their business. So during our based on our focus model and the DCF model, we could tell that there is a very fluctuating net income for the past few years for ETSY, and there are also very unstable free cash flow forecast in the past few years by some macroeconomic factors like the pandemic reopening and currency fluctuations, climate impact, supply chain disruption, technology revolution, and the regulatory environment. And also, ETSY's business is built on individual sellers with one-of-a-kind distinct product. So they have increasing active buyers and sellers for the past few years, but it's still a little bit missed the market's conscience. And follow the graph on the bottom of the slides, like the average purchase day per repeat buyers for ETSY in the past years. And this tells us to know more about the brand loyalty for ETSY, which they mainly focus on inspiration, efficiency, and reliability. They also follow levers of drive impact for ETSY and growing management across marketplace platforms. Positive acquisition contributions remain the key growth drivers. And their asset turnover is pretty good. Like it helps to know maybe there are some good forward-looking in the past future to have.
Next part is investment rate. In recent years, ETSY has not only made money by selling products, but also increased its revenue by offering additional services such as advertising, payment processing, and shipping services. This service not only bring more revenue for ETSY, but also make it more convenient for buyers and sellers to use the platform. ETSY's financial situation is stable with enough cash reserves to invest in development and cope with economic downturns. And the company's market value also changed overall, as it's doing well in increase in revenue and diversification, but there are challenges in maintaining stable cash flow and market value. Finally, ETSY has had little to no debt in the past, but long-term debt started to rise in 2018, following a large number of investments and then remained consistent over the last 3 years. How ETSY manages its supply chain and response to market changes also has a large impact on its revenue stability and growth potential.
Firstly, we forecast the income statement, balance sheet, and free cash flow for the future 5 years. We can see that the financial performance for the future 5 years are fluctuated. The football field analysis presents various valuation matrices, suggesting a target price of $43.35 against a current price of $62.3. But comparing the other similar competitors, Wix, TripAdvisor, Zalando SC, and eBay, the company appear overvalued on all matrices compared to the target price. We use the WACC as 10% 78% to calculate DCF, as the WACC is very big and the company has a large debt value and less cash value, so the forecast DCF range is lower than the current price. Assumption drivers. Debt. The current debt of the company is $2,295 million, but the cash company is only $940 million. The company needs to improving cash flow and reducing immediate financial burden. Premium. A premium of negative 58% indicates that the intrinsic or estimated fair value of the share is significantly lower than the current trading price of the stock. The market may be overvalue the stock based on current information, sentiment, or speculation, rather than company's fundamental financial performance and outlook. High risk profile. A WACC of 10%, 78% is considered high, especially in a low interest rate environment, reflecting the company's high risk profile. Through the sensitivity test, it appears that the share price is more sensitive to charges in WACC than to change in the terminal growth rate. Higher lower share price, where a higher terminal growth shows an opposite effect.
This part is about ETSY's risk due to ETSY's revenue stream, which highly relies on old and new sellers and buyers. It faces operational risks from unpredictable net income fluctuations, notable significant loss in 2022, rising competition, particularly from established entities like eBay with a wider customer base. Macroeconomic factors, including inflation and geopolitical tensions, may decrease customer spending, potentially reducing marketplace revenues. Financially, ETSY's long-term debt has soared, climbing from $861.1 million to $2,424.5 million with 4 years, amplifying its financial risk exposure and obligations. To navigate operational risks, ETSY implemented a purchase protection program to secure transactions, offering refunds for issues with orders. This strategy, however, brings potential financial risks and could affect seller relations. Competitively, ETSY stays ahead with innovative platform features and a right-to-win strategy focused on personalization, enhancing buyer engagement, and differentiation from rivals like eBay. For macroeconomic vulnerabilities, ETSY expanded its global reach, notable in emerging markets such as India, with localized payment solutions connecting millions of sellers to buyers, which diversifies and strengthens revenue streams. Financially, ETSY invests in short and long-term securities to preserve capital and ensure liquidity. However, it can't cover ETSY's significant debt from convertible senior notes, which still poses a risk to financial stability. Given the decreasing market share, structural uncertainties, and the volatile free cash flow, the weighted valuation stress a potential overvaluation of the current share price by 13.41%. The decreasing long-term debt adds to the financial risks. Based on these factors, would to sell, anticipating a market correction. That's all. Thank you for listening.